In this class, we're solving a question from WAEC, November-December 2007, question 7. You can take the full class on the topic by visiting jadosconsulting.com, okay, to have a view or take a class that gives a complete teaching on the topic. You can as well buy my textbook, where you can also read on the topic in full and solve some other questions. One copy is 7,000 or $12 US basically, and then you can as well gift someone for 6,500 naira or 11.5 US dollars. So in this question, we have Satopong Limited operates two departments. The following information relating to its operations for the financial year ended 31st December 2005 was provided. So we have footwear, we have clothing, sales, stock 1st January 2005, motor van at cost, furniture and fittings at cost. Other common costs, we have repairs, carriaging was, advertising, lighting, and wages, salaries. Then we have additional information there. Additional information, it says A, purchases is 30% of sales in each department. B, carriaging was, advertisement, lighting and cooling expenses are to be apportioned between the footwear and clothing departments in the ratio of 3:1 respectively. C, apportion repairs and salaries, apportion repairs and salaries between footwear and clothing departments in the ratio 2:1 respectively. D, wages is to be apportioned equally between the two departments. Then E, depreciate fixed assets at 20% per annum on cost. You're required to prepare in a columnar form a departmental trading profit and loss account for the year ended 31st December 2005. So this is your normal trading profit and loss account, but in this case we're doing it for department. So there's a class on jadosconsulting.com for departmental account, so you can visit jadosconsulting.com to take the full class covering departmental account. So here, let's take the questions. We have Satopong Limited. So we are having Satopong Limited. Okay, so we're preparing departmental trading profit and loss account. So say departmental trading profit and loss account for the year ended 31st December 2005. So let's go. So we have what do we have here? Let's go. Let's say this is the columnar form. Okay, so we have this here. So let's call this footwear. Let's call this clothing, and then this will be the total. So it's in Lee. Lee is Sierra Leone. So I think it's a Sierra Leonean currency. So this is the debit side, this will be the credit side. So here, the same way, we have footwear, we have clothing, and then we have total. So that's Lee. Okay, so that's it. So it's a normal trading profit and loss account. So the first thing here, we say what? Opening stock. So what's the opening stock in the? We have stock 1st January 2005, footwear 7280. We have clothing 5420. 5420. So what's the total? Let's use our calculator. So the total here, we have, excuse me, we have 7280 plus 5420. So we have 12700. So the next one, purchase is there. It's not given direct. It said purchases is 30% of sales in each department. So what are our sales? So we have sales here. Sales for footwear is 72,500. 72,500. Clothing is 36,250. 36,250. So the total, we have 72,500 plus 36,250. That's 108,750. Okay. So now they said purchases. Information A said purchases is 30% of sales in each department. So we said purchases. Okay. So we can just say purchases. That's A. That's 30% of sales. That's 0.3 times what's footwear there? 72,500. Okay, and that's equal to that's equal to 0.3 times 72,500. So we have 21,750. Okay, this is for footwear. So for clothing, 0.3 times 36,250. So that's equal to 0.3 times 36,250. That one is 10,875. So purchases for footwear is what? 21,750. Clothing is 10,875. So what's the total? The total is 21,750 plus 10,875. Total is 32,625. So let's add. Okay, so this 0 plus 0 is 0. 8 plus 5, that's 13. 3, carry 1. This will be 8. 10, 0, carry 1. This will be 2 plus 7, that's 9. 29,030. This is 5. This is 9. This is 12. Carry 1. 1 here. This is 6. This is 16. 16,295. So 16,295 plus 29,030. That'll be 45,325. Okay, so this will be your cost of goods available. Let's be sure that there's no carriage inward and there's no let's say return outward. Let's check. Is there any return outward in the question? Okay, I can see carriage inward. So we'll say carriage inward. Carriage inward is the cost of bringing goods to the point of sales. Okay, so it's part of purchases. Carriage inwards, according to the question, is 2,800, but it is a common cost. You know, in the financial account, we apportion cost. We apportion common cost among the departments. So how do we apportion carriage inwards? Now they said B, carriage inward, advertisement, lighting and cooling expenses are to be apportioned between the footwear and clothing department in the ratio 3:1 respectively. So what we have there, that's B. That's B. B, carriage inwards. Okay, so for footwear, that would be 3. For clothing, that would be 1. So that is equal to what? 4. So footwear will be 3/4 times what's the carriage inward item or value? Carriage inward value is 2,800. That would be times 2,800. So for clothing to be 1/4 times 2,000 what? 800. So what do we have? So what do we have? We have 3 divided by 4 times 2,800. That will be 2,100. Here will be 700. So carriage inwards for footwear will be 2,100. For clothing will be 700. So total will be what? 2,800. So let's add up. 0 plus 0 is 0, 3 plus 0 is 3, 0 plus 1, 1, 9 plus 2, 11, this will be 31, 130. We have 5, 9, 9, 6, 1, 16. So here we have 5 plus 0, 5, 2, this will be 11, this will be 8, and then this will be 4, 48, 125. So we can call this cost of goods available for what? Sale. So according to the question, is there closing stock? Because I can't find return outward. There's no return outward in the question. So what we have here, is there any closing stock? Is there any closing stock? I can't find closing stock as well. So our closing stock is dash, dash, dash. Okay. So that leaves cost of goods. So we have cost of goods what sold. So we now get let's get our gross profit between your sales minus your cost of goods sold. If there's any return inwards here, you take it from the sales. There's return outward, but there's no return outward, and there's no return inward. So let's just get between sales and cost of goods sold to get our gross profit. So we say gross profit. So for the gross profit, so we'll say 72,500 minus 31,130. So profit here will be what? 41,370. Okay, 36,250 minus 16,995. Okay, here it is 19,255. Okay, so if we say 108, which is total there, 750 minus 48,125. We have 66,225. So we can check by adding these two to see if it gives us this. Okay, so we have, I can just say 60,625 minus 19,255. So that gives us 41,371 point. So this is it. So here will be 72,500. Here will be 36,250. Here will be 108,750. So gross profit is carried down here. We'll say gross profit brought down here. So we'll bring 41,370 here. We'll bring the 19,255 here. So here will be 60,625. So let's bring our expenses. What's the first expense there? We have repairs. Repairs. What's the repairs? The repairs there is 4,680. It's a common cost. So how do we apportion it? So we look for the apportionment instruction. So I can see C, apportion repairs and salaries between footwear and clothing department in ratio of 2:1. So we say C. Okay. Repairs. Okay, so footwear, say the ratio 2 to 1. Footwear is 2, clothing is what? 1. That's 3, Abby. So footwear will be equal to what? 2/3 times how much? 4,680. 4,680. So what's the total there? Excuse me. This phone calculator. So we have 2 divided by 3, okay, times 4,680. So this is 3,120. So clothing will be 1/3 times 4,680. Okay, that's 1,560. So repairs here, footwear is 3,120. 3,120. Clothing is what? 1,560. So total will be what? 4,680. Okay. The next one there is carriage. We've done carriage in what? Advertisement. Okay, advertisement there is 6,008, and then information says that we should apportion advertisement among the departments, okay, in the ratio 3 to 1. So carriage in what? Advertisement and lighting are taking the same formula. So I've already given a guideline here. So it's the same way. Carriage in what? Advertisement and lighting are taking the same formula, which is 3 to 1. So we just do 3/4 times whatever it is. So that we can be fast. Let's just apply it here. Okay. So we have advertisement. So we'll say advertisement. Advertisement here. So we already know how to apply it, Abby. So that'll be 3 divided by 4 times what's advertisement in the question there? 6,800. So footwear is 5,100. Then clothing is 1,700. So that would be everything will be 6,800. Okay. So the next one there is lighting and cooling. The same formula. Lighting and what? Cooling. Lighting and cooling, according to the question, is 2,600. So we have 4 divided by 3. 3 divided by 4. Excuse me. 3 divided by 4. Okay, times what we have there. 2,600. So footwear is 1,950. 1,950. Okay. Clothing. Okay. That's 650. Okay. So the total will be 2,600. So the next item there says wages. Okay. Wages there is 17,800. Salaries is 8,400. So we have instruction D says wages is to be apportioned equally between the 2 departments. And then we have salaries. Can I have salaries there? Salaries is 2 to 1. So let's go. So we have, let's say, wages and what? Salaries, okay? So let's go. Let's do wages here. Okay, this is wages. This is what? Salaries. So wages, according to the question, wages according to the question is proportioned equally. So wages, okay, will be for footwear, okay, that will be 17,800 divided by what? 2. So what would that give to us? 17,800 divided by 2 divided by 2, that's 8,900. C will be 8,900. The salaries should be apportioned in the ratio 2:1. So that will be 2 divided by 3, just like what we did here, okay, times, so that is 8,400. So size here will be 2 divided by 3 times 8,400. That will be equal to 5,600. Okay, so here will be 1 divided by 3 times 8,400. That will be equal to, okay, that will be equal to 2,800. So for F, that's footwear, wages and salaries will be 8,009 plus 5,006. Okay, 8,900 plus 5,600. So that's 14,500. Then for clothing, that will be 8,009 plus 2,008. Okay, so we have 8,900 plus what? 2,800. That's 11,700. So the total 14,500. That's 26,200. So this 26,200 is the combination of what? Of total wages and total what? Salaries. Wages is 17,800. Salaries is 8,400. So if you add both together, okay, 17,800 plus 8,400, we have 26,200. So basically, although some approach might want to, put wages as a direct cost and pay salaries as an expense, that is also used. But most practically would combine wages and salaries, okay, except where stated differently. So there's nothing wrong if you put your wages as a direct cost and then bring your salaries here. Okay, so it varies from organization to, but there's still nothing wrong combining wages and what? Salary. That's what we have done here. So the next one there, we've done repairs, we've done carriage work, we've done advertising, we've done lighting and cooling, we've done wages and salaries, we've done purchases, okay? So the next one there is depreciation. So let's depreciate. Depreciation, the first one there is what? Motor van. We have motor van, okay? So we have motor van there to be 28,800 for footwear, 19,200 for clothing. Okay, so depreciation, depreciation will be 0.2 times. What's the cost of motor van? Is 28,800. 28,800. C, depreciation, will be 0.2 times what's the cost of motor van? 19,200. So if we have to get the depreciation for footwear, that will be 0.2 times 28,800. Okay, that's 5,760. 5,760. Then for clothing, that's 19,200. That's 3,840. So we have the motor van here. Footwear is 5,760. Clothing is 3,840. Okay, so the total, which is 5,760 plus 3,840, that's 9,600. Okay, so the next item there is furniture and fittings. So let's calculate furniture and fittings the same way. F will be what? 0.2 times what is the cost of furniture and fittings for footwear? That's 8,900. C will be 0.2 times what? What's the cost of furniture? That's 5,900. 5,900. So this one will be 0.2 times 8,900. That's 1,780. Then 0.2 times 5,900. That's 1,180. So F here for furniture and fittings will be 1,780. Then 1,180. So total 1,780. That's 2,960. So that is it for all the expense item. So let's calculate and balance up. So how do we add up all your expense here, take it out of your what? Gross profit, to see if you have a net profit or a net loss. So let's see, let's add up here. I see 3,120 plus 5,100. Okay, 5,100. Okay, plus 1,950 plus 14,500 plus 5,760 plus 1,780. So that's 32,210. So 32,210 minus 41,370. In that sense, so we can say 41,370 minus 32,210. 41,370 minus 32,310. So we have 9,160. 9,000. A marker here. What do you have now? 9,160. Okay, that's your net profits. So the next one there, we have 1,560 plus 1,700 plus 650 plus 1,700 plus 3840 plus 1180. So we have 2630. 2630 is higher than the clothing figure, so there's a net loss here. Net loss minus 19255. Net loss of 1375. You see? Okay, so that's the, let's do the total column now. Total column, we have 4680 plus 6800 plus 2600 plus 26200 plus 9600 plus, what do you have there? 2960. So that's 52840 as the total. So basically, if you take that out of total profit for the year, that will be 60625 minus 52840. So I can see 7785. So wow, Maka is not performing. So this side is 41,370. Okay, so this side is 19,255 plus 1375. That's 2630. Here will be 6625. Okay, 2630, 41,370. So this is a departmental account, okay, and what that's shown us is that in total the business made a profit, but the clothing department made a loss, while the food department made what? A profit. So the profit the food department made is 9160, while clothing department made a loss of 1375. Even the business at a total made some profit. So that is some of the advantage and of what of departmental accounts. Okay, so you can as well go to advertisement.com to take a class on departmental accounts where we explained some other things. You can as well order for my textbook by reaching out on the number displayed on your screen, or pay that into the account displayed on your screen. Make orders or sponsor copies, or you can as well be benevolent by supporting the course. Thank you.